Begins at LSE Share Talk. Today I have the pleasure of speaking with Arthur Millholland, Canadian Overseas Petroleum CEO. Hello, Arthur, how are you?
I'm very good. How are you today?
I'm very good, thank you, sir. I've done a bit of research on you, mate, and you've done exceptionally well in the industry. And I'm seeing here that historically you were the former CEO of OilX Co. that you
Yes.
grew to a multi-billion pound company before the financial crisis happened.
Yeah, well, I certainly was, and as people know, it's at the time, 2008, we're all stunned what happened and how quickly it happened in the world, and unfortunately, at Oil Exco, we got caught up in a storm that we didn't create. The banks all ran out of money and decided they wanted their money.
Yeah, yeah, very
But
true.
but anyways, our Canadian Overseas, we started again, and I've got a core group of people that was with me at Oil Exco, and rather than focusing our intentions in the UK North Sea, we're focusing our attentions in West Africa this time.
Yeah,
So
I wanted to touch on that. You regarding the team that you've got involved there, please.
yeah,
If you could touch on, firstly, just introduce yourself and your history, and then go into the team, please, Arthur.
yeah. Well, I'm a petroleum geologist by trade, and I've been working in the industry for 34 years,
Yeah,
and throughout that time, I've been very, first as a working geologist, and as started businesses, and as a manager, if you want to talk
yeah,
that way,
yeah,
and financier, and I have opportunities to started off here in Western Canada because I'm speaking to you from Calgary right now,
yeah.
and in the U.S. Then I've looked at things in, of course, Africa, the North Sea, and had some experience in the Middle East as well. So we're very well rounded,
Hmm.
and then the team I have, a lot of what our secrets to success at Oil Exco, where we went into a basin with a fresh look, in a fresh set of eyes, but really utilized seismic data and very sophisticated processing of it to give us an edge, if you want to, so to speak, to be able to find oil. And certain reservoirs in this world, and as well, that are oil bearing, lend themselves to be able to differentiate between oil and water on seismic data. We've been able to differentiate between gas and water
Yeah.
for a number of years since the 70s, but oil and water is something new.
So let me
And,
let me just ask you one quick question there, Arthur. What technologies are you using that's different to enable you to do that?
well, the biggest change has come about, and it's like it's akin to video games. Today, if you looked at basic in the 80s when Pac-Man came out, it was very primitive,
Yeah.
and today, you've got Sony's new PlayStation 4s,
Hmm.
which you look at the graphics and it's almost like you're looking at a real life, or sort of almost like a television program.
Yeah, yeah,
And the same is true, with seismic data, is that in the 90s there were the only people that could afford the supercomputers to process seismic data, and these were the same computers that the U.S. Department of Energy used to design and simulate nuclear weapons,
yeah,
explosions and things. Were the likes of the super majors, and but today, computing hardware is very affordable. In fact, it's dirt cheap.
yeah,
And I use the example of a Sony PlayStation 4, and they're very powerful. And most of the listeners don't realize that Sony PlayStation 4s, are still embargoed against, for export to Iran.
yeah.
And the reason being is because you can hook them all up in series
Mm,
and build yourself a very low cost supercomputer with about 1,000 PlayStation 4s.
clever. Yeah,
And so the ability to process the data, is what brought these techniques to the fore, as well as the computing hardware, and the ability to acquire the data has changed as well. And so these ships that are offshore are for seismic acquisition are absolutely massive. So if you take our block that we have in the deep water of offshore Liberia, is that we're recording. The ship was pulling an array, we'll call, of hydrophones, just not one streamer but several streamers, and the length of the streamer was just a little over 8 kilometers in length.
Yeah.
And you couldn't do that in the 90s. And so the net effect of it is because you can record a massive amount of data, and then to be able to process it, you can do things to the seismic data that you just couldn't do. And our industry, is about risk management. That's
Yeah.
all we do.
Yeah.
It would be akin to turning around and saying, we want to reduce and mitigate all the risks that we can, because at one time, oil exploration, people was used a rule of thumb that the chance of success of finding oil on an exploratory well, or a wildcat, as we would call it, would be 1 in 10.
Yeah.
And today that's not good enough. We like to get the numbers to if you were betting on horses, as people like to do in the UK,
Yeah.
you'd sort of say 9 to 4 odds,
Mm-hmm.
which is 2.5 to 1.
Yeah. Yeah.
That's 40%, right?
Yeah. Yeah.
50%.
Near enough. Yeah.
So really the focus is to say, almost to say yes or no. And if you look at the deep water part of the world, right, which we're active in off of Liberia with
Yeah.
ExxonMobil,
Yeah.
there 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 you know there really are not as many dry holes drilled as people think that there are. Now, the
I
question
was gonna
is,
ask you about that. I'll ask you about that
yeah,
later. Yeah. Go on.
yeah. The question then is how do we take this load of experience that we have and target something that we think is and to make it all work. And that's what makes us a little bit different,
Yeah.
primarily because we have a good team of people and diverse, right from reservoir engineers to geophysicists, geologists, and all who look at these things and say, add their 2 cents in, or their, so to speak.
Yeah.
In other words, and it gives a pretty thorough review.
Okay. So your main asset that the company's got is the 17% interest in Block LB13 in Liberia. Could
Correct.
you explain a bit more about that and the relationship with ExxonMobil, please?
Yeah. Well, this would be an example of what I was talking about. Now,
Mm-hmm.
we actually brought ExxonMobil into the venture, or they became a partner of ours. Because given the size of our business, it would be unlikely that they would pick up the telephone and call us and say, "How would you
Indeed.
like to do this opportunity?"
Indeed.
So for a few reasons why they're a partner of ours. One is that when we negotiated a deal to acquire this asset to start, is that we did an awful lot of due diligence around it at a level that was acceptable to them. So in other words, we're very thorough in making sure that the history of this asset in the past, there wasn't any shenanigans that went on with it, so to speak.
Yeah. Yeah.
And the second thing is that um, we did a fair amount of work on the seismic data. In other words, we had a brand new 3D seismic survey, and that we had, and worked it up, and said, caused us to we knew there was something there substantial, and I mean substantial, to the point is when I first saw it, and I was the first one of our team to see the seismic data. I literally, as I say, it was a figure of speech, fell off the chair
Yeah.
when I saw it, because you would maybe see something like this, and maybe once in your career.
Mm-hmm.
They were also aware that there was something there special on this block as well, and but for the first 2 years, from we entered into a contract with them, an agreement in September of 2011, and up until April of 2000 and 12,
Yeah.
when we excuse me, April 2013,
Yeah.
when we finalized a new contract to govern this block. In other words, a production sharing contract with the government of Liberia.
Yeah.
Is that we worked on the seismic data solely ourselves. And then in April 2013, we gave all the interpretive work that we on the project to Exxon, and they when they started to review it, they were absolutely stunned.
Brilliant.
And they said, to one of the comments that was made to us, we thought that we were one of the few companies in the world that did work to this level of sophistication,
Hmm.
and we're actually um, amazed that companies of your size can do it. And that was really quite a compliment to us.
It is,
And
because they're
yeah,
complimenting your team and the fact that you've done
exactly.
such great due
Yeah,
diligence, and you're attempting to bring in a very large payload, and you're
yeah,
choosing the very best options open to you. You're not going for something there's a 10 or 15% chance of coming off. You're looking at something that's got a 50 or a 40% chance of coming off.
yeah, yeah. And I think that's really, and that's really the key, as well as, that they're, as you can imagine, they've been in business a long time, and
Indeed.
their reputation
Mm.
is something that they hold quite dearly.
Yeah.
And so, to for us to be a partner of theirs is also confirmation that we realize, and I realize that having this relationship is very critical and important. And we're just as much as part of their team as they are as ours, because we
Yeah.
want to make sure that we maintain that very good relationships that we have with the government involved and between ourselves. Yeah,
Of course, and
yeah,
the amount of money that Exxon have farmed in for and invested or going
yeah.
to invest in
Well,
the
well, well.
drills.
We have, and I'll start. We have invested Canadian Overseas in this project. We've invested just a little bit of what I call hard dollars,
Yeah.
and that's it. Not in counting our overheads,
Yeah.
but just a little more than $25 million in this.
Yeah.
Exxon to date has north of 160 million invested in the project,
Yeah, and that's dollars,
and
of course.
that's dollars. Yeah,
Yeah.
and and our deal with them is that we're carried for all costs until they spend 120 million dollars gross on drilling. Now, our carry started in April of 2013. So, for example, they've done a lot of their own proprietary work on the seismic data
Yeah.
from a different approach than the work that we did, and it's come up with the same exact
Yeah.
and very similar interpretation. When
Yeah.
I say the same interpretation,
So they're
the same result.
yeah, just clarifying and making sure
So
that the money that they're spending is worthwhile. Yeah.
exactly. So what it
Okay.
again does is mitigates risk, okay?
Of
Because it
course. Yeah.
says we've approached a different solution and we've come up the same
Seems
answer.
brilliant.
And that work is very costly to do. And they've got a team of scientists working on this,
Hmm.
and that costs money as well. So we've yet to drill a well. And now the first well on this prospect, was to be drilled in the fourth quarter of 2014,
Hmm.
and Ebola got in the way. And but at the time, none of us knew, either at our firm or their firm, that you know that this there was this potential for this epidemic
Yeah.
of Ebola. And in
Pandemic.
fact,
Yeah.
the world got caught off, including the World Health Organization and things.
Very much
And
so.
so we had to stop. And
Hmm.
and the reason why they had to stop, it was the issue around medevac.
Yeah.
Um, as much as we all like to have safe operations, in is whether you're onshore or offshore around drilling. Uh, Working on a drilling rig is one of the most dangerous places in the world you can have work,
Yeah.
historically. And, like, for example, here in Alberta at one time, this would be 20 years ago, I read a study where where they said the only other job that was more dangerous in Alberta than working on a drilling rig was working on a kill line in a slaughterhouse.
Oh.
So because
Mm-hmm.
equipment's big and they're handling heavy pipe and things like that,
Yeah.
and things do happen, and and it's a very hard thing to say. You can't help people save people from themselves. So
Yeah.
if someone was to be injured on a drill ship and you couldn't fly them to by helicopter to a hospital in Monrovia or Freetown in Sierra Leone because of the Ebola epidemic, and that was as plain as that.
Mm-hmm.
That's why everything
That's a
stopped. Now,
delay. Yeah.
yeah, exactly. Now today, we know that now that they know and we know that Ebola is a potential issue. Is that you can change your whole logistics around how the well is drilled to account for that. And so, in other words, is that there'll be minimal shore support from Liberia on this project. All of the shore-based support will come out of the Ivory Coast, out of Abidjan. And so in that way, the crew changes will happen by boat. There'll be a large vessel, like we call it a small cruise ship, that would typical of what goes to the Arctic or the Antarctic in their summer times.
Yeah.
And so I have 60 berths that will be a medical suite and almost, just not a heavy but a light surgical suite on board, with paramedics there. So in
Yeah.
case if somebody does get injured on the rig, they can be taken to this vessel and stabilized.
Yeah.
So all of those things have been planned in the well planning process to make sure that the well gets actually drilled.
Yeah.
The other thing that's important to note is that now here we are in a lower priced oil environment versus where we were 2 years ago.
Of course.
Is that the costs have come down dramatically, and so, for example, the drill ship that they've identified to use on this project is one that's currently working for them in West Africa in deep water, but its contract is up for renegotiation, and currently, it's working for in excess of $600,000 a day, and we would expect that the day rate on the vessel, the new day rate will be less than half of that, and much
Okay.
less than half of that. So, and again, all other costs, globally, whether the service costs have come way down as
Mm-hmm.
well.
Yeah.
So our well carry, originally by agreement, would have lasted probably for just a little bit over one well. But today, because of the costs have come down, it's likely to last for two wells and maybe two and a half wells. And so on the basis of a discovery, is that we would be also carried likely for the fully carried for the first appraisal well, and that's something from the market perspective that's quite important, in as much as on a discovery, we don't have to go back to market right away looking for a large sum of money
Yeah.
to participate in the drilling of the well. Yeah,
Okay.
of the second well. Yeah.
Yeah. Yeah. So at the moment, are you still scheduled for Q4 of
Yeah,
2016, or
yeah,
are you
and that,
just are you looking
absolutely.
towards early 2017?
Well, our disclosure, has been is drilling either in late Q4 or
Yeah.
early Q1 of 2017. And so right now, um, that that all holds true. What I can't tell you is the exact day or right now the exact week,
Yeah.
um, but we're close to being able to do that because as we go down the road, and this is a logistical
Of
exercise,
course. Yeah.
akin almost to moving a navy. Okay, so for example, when the to repel the Argentinians from the Falkland Islands, Great Britain, mobilized the navy
Yeah.
to send troops and vessels and aircraft to the Falkland Islands,
Yeah.
and along with the warfighting vessels, there were also vessels there to support it. Okay, to support the convoy or the fleet, if you want to call it that,
Yeah.
and
Fuel
and
tankers
and
and everything.
and
Yeah.
this is really somewhat similar. So
Yeah.
think of the drill ship as the aircraft carrier, and all of the other vessels, and there's a number of others that have to
Mm-hmm.
be there. Like there's a standby vessel that's there all the time, just in case there's a fire
Yeah.
or somebody goes overboard to
Mm-hmm.
pick them up. There's supply vessels that shuttle back and forth. There'll be two of those that go back and take, things like drilling mud and tubular pipe back and forth to the shore base. There'll be this vessel, which is like think of it as like a hospital ship. In other words, there'll be people brought out to it if you're going to do crew changes that were
Yeah.
done quickly. So all of this has to arrive at the same time, all right? Because
Mm-hmm.
if one part doesn't, then it's on standby costs, okay? Because you're paying for it once it's there.
Once it's there, you're paying every
And
day. Yeah.
exactly. So the biggest item is of course the drill ship. So what the well planning people in the drilling department at Exxon are working on here now is they've got the services contracted, all contracted here.
Mm-hmm.
Is that now they work with the service companies and they say, okay, the drill ship is out drilling right now. It's out on other projects. And because of the cost, the daily cost of this vessel, every operation is planned right down to the minute. Okay, because it's $600,000 a day or $630,000 a day is an awful lot of money, and
Yeah.
that's just for the vessel. That doesn't count all the other equipment that you got out there.
Yeah. So you've got to maximize the
So,
usage of
so
all of them. Yeah.
exactly.
Yeah.
So because their well planning process is that they have a pretty good idea between when this drill ship is going to finish its current project, and of course, when you do well planning, you plan for, it's a probabilistic approach. You say, well, here's our what we call our 50% chance or case on timing.
Yeah.
In other words, the number of days out drilling. Silly things happen on drilling rigs, like hammers do get dropped down the hole,
Mm.
and wrenches do get drop down the hole where you got to go fetch them. Okay, you got to
Yeah.
fish them out of the hole, and so those things you have to account for as a
Mm-hmm.
risk.
Yeah.
But they tell us they're right on what we call the P10 curve. In other
Yeah.
words,
Yeah.
things are going very quickly
Mm.
and very efficiently on the current project it's on. So all of that does is mean that commencement of operations date comes towards us. Okay,
Yes.
and by September, we'll have a pretty good idea right down to the week, okay, of when the vessel will likely become available, assuming that its performance is typical of what it's doing through here right now.
Okay.
And then at that time, there'll be no more news flow from us, and of course, then when you isolate it to 1 week plus or minus on each side,
Yeah.
then it becomes 1 week, and then you say you have a target date, right?
Yeah.
In
Of
other
course.
words,
Yeah.
when it's going to move. So as we get closer to where we are, that's that
You'll come back to the
that's the
market and tell
progress.
us.
Yeah,
Yeah.
yeah, exactly.
That's cool.
Yeah.
So at the moment then, have you guys got an expectation at CoPL how far you may drill that first well?
Oh yeah, it's already been planned.
Yeah.
The location, was picked
Yeah.
some years ago
Yeah. I'm just
by
thinking
us.
more. I'm
It's never
thinking
changed.
more of the actual depth.
Oh, the depth. Well,
Yeah.
the well itself is going to be drilled in approximately 8,000 feet of water,
Right.
or 2,400 meters of water, and the total depth of the well is going to be in approximately um, below sea level. I believe it's about 5,400 meters, and so if there's 2,400 meters of water, then there'd be 3,000 meters of
Yeah.
actually rock to drill through,
Right. Okay.
and it's soft rock. So and there's so if we call it 5,400 meters, it's a fairly deep well,
Deep well. Yeah.
um, but it's not at beyond what close to 17,000 feet.
Yeah.
It's not beyond what the technology is.
It's,
Like, for example, that the vessel that they're looking to use is designed to work in 12,000 feet of water
yeah. Yeah.
and to drill to a depth of 40,000 feet, with 4.5 inch
Yeah.
drill pipe.
If
So,
necessary. Yeah.
so it's and again, 30 years ago, these kind of vessels didn't exist.
Yeah.
So,
Yeah.
um, we're well within the technical realm. We're not pushing the limits, so
Yeah.
to speak.
Well, that's good.
Yeah.
Arthur, let me just ask you, with regards to Liberia, yeah,
Yep.
industry-wise, there's been a very low number of wells drilled offshore since the turn of the century. Is there any particular reason why? Was it because it was just
Yeah.
deep water resources there that people didn't have the technologies to go and get?
Well, and that's the answer. You know, they along the continental shelf there were wells that were drilled in shallow water,
Yeah.
and they found, you know, oil shows, but the reservoirs were lacking. In other words, they weren't high quality reservoirs.
Right.
And it wasn't until um, first the ability to acquire the kind of seismic data I was telling you about, okay,
Yes. Yep.
and to be able to identify these deep water sands on seismic as being prospective.
Hmm.
And the second thing was, once that was done, then the industry had to figure out how to drill them.
Of course. Yeah.
And so, of course, then the design of these deep first, if you know, these are what we call sixth generation drill ships. Okay,
Yeah.
and for example, when the North Sea, started in the 1970s, is that the semi-submersibles then were second generation, and then of course in the 80s the third generation, semi-submersibles were made. So we're quite a long ways away, and the
Hmm.
big thing, which really the advancements are things like GPS,
Yeah.
is because these ships aren't anchored, they're what they call dynamically positioned,
Yeah.
so they have thrusters on them. But because the GPS after the Cold War became available, in other words, um, to where you can find yourself,
Hmm.
within like a foot,
Yeah.
right, of any place in this planet. We're back, in the early days of GPS, the codes were secure, and you were lucky to get within 1,000 feet.
Oh dear.
Because that was the idea,
Yeah.
because what the U.S. didn't want the Russians to get a hold of it,
Yeah. Of
to
course.
be able to put a missile into the White House type of
Yeah.
thing,
Yeah.
right?
Yeah.
So the because you have that ability, is you can keep the vessel on station, and as well, all of the technology, to once you get down to the seabed. And if you think about it, 8,000 feet of water, and most people, whether you're think in the UK in miles, so 5,280 feet is a mile, right?
Yeah. Yeah.
And so you think you're almost a mile and a half down, and to the seabed, and then you got to start working below that, and it's cold. You're just above freezing as the water temperature. It's a very hostile environment.
Yeah. Of course.
So to get all the technology to work in this is really something. And it was all developed in the U.S. because the first parts of the world where this deep water exploration and production occurred was in the Gulf of Mexico. And so because the Gulf of Mexico is, if you want to call it that, the U.S. is a very considered politically a low risk environment, and so an industry is still discovering oil in the Gulf of Mexico, but it's brought those techniques to West Africa. And the first place that they took it was Angola, and they found some big deep water resources in Angola, as well as in the deep water offshore Nigeria. And so it's a natural progression to go up the coast in what we call this transform margin, and as well as deep water off Gabon. And those are known oil provinces.
Yeah.
What's changed is that an area, countries like offshore Liberia, is that they're not known oil provinces, but with these deep water prospects, they can turn into be, because they know there's source rocks out there,
Yeah.
and as well as high quality sands to make the reservoirs. So all you need is a trap,
Yeah.
okay, and that
Yeah.
and that's where it is. Yeah.
Okay, cool. I mean,
Okay.
there has already been discoveries nearby. The Narina discovery.
And they're small.
Yeah, there were small ones, yeah. But how close
Hmm.
was that to Block 13?
Narina is about 50 kilometers,
50 kilometers.
which is
Okay.
30 miles to the
Yeah.
southeast.
Yeah.
And again, they're small.
Small.
There's also three small discoveries in Sierra Leone. But the key thing is to exploration is that they would, what we would call, be the first pass.
Yeah.
in the basin.
Hmm.
So in other words, is that when you look at them and say, all right, what were they targeting?
Hmm.
And and I think today, if you did a proper post mortem on them, you'd find that from what you know today is that the targets, were pretty small,
And
and
speculative as well,
and
weren't they?
speculative.
Yeah.
That's right, and as well as in the areas like, for instance, around the Narina well, the seismic quality was very poor.
Hmm.
Okay, and if we compare it to the quality of the data that we have,
Yeah.
and and the targets, they're what we're doing is different,
Yeah.
and but at the same time, we can have a look at what they've done, and we've
Yeah.
traded well information,
Yeah.
with them. So for instance, when we drill our well, they'll get our well information,
Yeah.
and it allows you to go back and look, and and because it's essentially, once you drill a hole in the ground, unless you find something that's a real secret, there's you can get benefit from somebody
Yeah.
else's
To look at it. Yeah. Yeah.
experience that
Hmm.
you can build in as either caution you,
Hmm.
or it will enhance what you have. So we've been able to look at all these things, and I think it's just fair to say that, and it's common in the history of the business, is that sometimes the first passes through, on the exploration program, are the ones that have either a high failure rate.
Yeah.
It's usually the second run through is where the bulk of the reserves were found.
Yeah.
And if you look at, for where your listeners would be familiar with, in the UK North Sea, is that is really the case. Point to the first big field was 40s. It was found in the 70s. Before that, in the 60s, there were lots of dry holes that were drilled.
Yeah.
But after 40s, there were still some dry holes that were drilled.
Yeah.
It wasn't until the 80s that things really got going, and you had this just wave of discoveries,
Yeah. Yeah.
which found an awful lot of oil in the UK, which the nation's benefited
Of
from
course. Yeah.
since that period of time. Yeah.
Yeah, and very similar. Similar with regards to Canada as well, with
Yeah.
shale as well.
Exactly. Yeah.
So Arthur, I wanted to ask you, with regards to the net P50 millions per barrel for CPL from
Yep.
LB13. What's the expectations there?
Yeah. We under our securities regulations here in Canada,
Yeah.
I can't tell you what we think about it, but I can certainly tell you what somebody else thinks.
Okay, that's fine.
And so we hired a firm called DeGroley McNaughton, who's one of the oldest um, evaluations firms in the oil and gas business. They go back to the 1930s,
Okay.
and their office in Dallas, Texas, and they've got lots of experience in Africa. Anyways, we gave them the seismic data set in 2011, and let them work it up. And we gave them basically some other historical things, and they came up with a set of numbers, and said that the P50 case on this block was a gross 2.6 billion barrels recoverable, and our net share would be 450 million. And
That's pretty staggering.
it's a pretty big number,
Big number. Hence the
but
reason why you've got ExxonMobil wanting to have a piece of that. Yeah.
exactly.
Hmm.
And since then, we've done an awful lot. We've done much more sophisticated processing on the data set, which which I put as akin to, um, back when I was young. We had televisions with aerials on them. So depending on, the time of the year, magnetic storms, the sun, and the
Yeah.
thing,
Yeah.
you'd have fuzzy pictures.
Yeah.
And now, if you take today to a 4K or super high
Yeah.
definition television picture, it's really that's the difference. Okay,
Mm.
in seismic data
Yeah.
I was talking about earlier, and so the sophisticated processing that we do will do one of two things. either it will remove the attributes that hydrocarbons have. In other words, that we believe the attributes that we see on seismic are attributable to hydrocarbon, or it will enhance them, right?
Yeah.
And will brighten them up and make them focus.
Yeah.
And what it's done on this project is that it's brightened them up and made them in focus. So we have a pretty good idea, okay, of what the size of the prize is here, and internally, and these numbers aren't out of line, okay, and um, we can fine tune them. We've been able to do that, and
Yeah.
so is our partner. But overall, I think it's a fair assessment from an independent third party.
Yeah,
Okay.
that's a good size to be
Yeah.
going for, most definitely. Okay. You've already mentioned the fact that ExxonMobil could be drilling maybe 1 to 2 wells.
Yeah.
If for instance,
Or
as a,
written would be carried on one to two
sorry,
well, or
carried, yeah,
two,
yeah,
or carried for two. Yeah,
carried
most
for
like,
two,
yeah,
most
yeah,
definitely. So, if we project forward, yeah,
yeah,
and we say, right, come September, October, we've got a date,
yeah,
and the time frame then for the drill
yeah.
from October. Are we looking at 3 months, 2 months before you'd have some data potentially?
The once the drill ship gets on location,
Yeah.
it's a very quick operation.
Okay.
So we would be looking again in, if you looked at the statistical, from a probabilistic
Yeah.
range of time, the best case, would be 30 days, okay,
Right. Okay.
from drill from
From
start to
start to
finish.
finish. Yeah.
The worst case would be 60, and sort of your mid case would be like 45. It's
Yeah.
that
Yeah.
simple.
Yeah. Yeah. Okay.
And
That's brilliant.
because they can and we can, just by looking at the shallow section, the
Yeah.
seismic data, and just from other operators, other wells that have been drilled, you can identify where the hazards are.
Yeah.
Okay. And even though you never say never, you always have to plan for the worst. And all it means is that it's usually due to hole conditions. So in
Yeah.
other words, if you get unlucky and you've got some slumping hole conditions, then this means that you have to stop and put steel casing in the hole.
Yeah.
In other words, to keep the hole intact. So you have to go down to a smaller size drill bit and keep on drilling. You like to be able to drill the most of the way without having to do that too often. But that's why they'll start drilling a big hole,
Yeah.
okay,
Yeah.
just in case, so you don't run out of hole down below. So I would expect that we would be from 30 to 45 days
Hmm.
from commencement of spudding the hole, from to having to know whether we're successful or not.
Yeah.
The other thing is that once the vessel leaves where it is currently, it's gonna have a sailing time, and it's gonna take it probably about a week, okay, to get out on location,
Yeah.
just because it's got to stop along the way, pick up people, pick up equipment,
Yeah.
and
Of
change
course.
things out. So I'd suspect, let's just say, if we started off at the beginning of December,
Yeah.
early December, is that at the earliest, that on a mid case situation, the operations would be finished would be about the end of January. Okay.
Okie dokie. Okie dokie.
Yeah.
I mean,
Okay.
hence the reason why Shore Capital have put your price on a risk basis regarding your assets at 16 pence, and that
Hmm.
even there, I think it would underestimate it if that came in January.
Exactly.
Yeah. Yeah.
So that's where we are now. As
Mm.
well, I should is that our partners are aware that what's material to us may not necessarily be material to them, but
Okay.
they're also aware that that we have to be able to tell our disclose on success or failure,
Yeah. Of course.
where we are, and that's important to us, and they don't have a problem with that. So
That's
and again is because those are just the rules, okay,
yeah.
that
Yeah.
we
Of
have to
course.
we have
Yeah.
to we
Rules
have
of
to live by.
engagement. Of
Yeah,
course. Yeah.
yeah, yeah. Okay.
Okay then. You've got I've got to ask you really regarding Exxon's Guyana discovery.
Yeah.
How similar is the geology to LB13, the block?
Well, yeah.
Do you
Well,
know?
from what we understand, and and we hear things, outside of our partners,
Of course.
and we also can also they tell us how bullish they are
Hmm.
on the project. Is that it's almost like a mirror image, if you want to talk about that. So
Okay.
if you put the South Atlantic back together again, and you've got anybody who listens to this, if they were to look at our presentation that we have on our website on page 9, there's an image of the mid Atlantic Rift and the South Atlantic, and you can see things have been offset, but the fractures that are going across, and then where actually that this well, or approximately where it is, and from that you can see that it actually regionally fits into this part of West Africa, and so the sands that when these rocks were deposited in the late Cretaceous, is the South Atlantic was, let's put it this way, the distance between South America and Africa wasn't very far apart. Okay,
Hmm.
so that effectively the source of the sands, that were deposited to make the reservoir in Guyana were sourced in South American continent. In Africa, it would have been the African continent.
Yeah.
But the essentially the depositional model, if you want to call it that, for these deep water turbidite sands is the same,
Right.
and
Okay.
and and they're all based on sea level moving up and down, and so for what we understand, they're the same age of
Yeah.
sand,
Yeah.
the same. We're looking for similar high quality reservoir quality. The source rocks would have been the same age because
Yeah.
it's the mirror image on the other side. So from all those standpoints, there's from a geological standpoint, you can say they're very, very similar.
So
Okay.
lots of positives there for you, Arthur,
Exactly.
and the company.
Exactly. Yeah.
Okay. Cool.
Okay.
You, you've also got other interests. Your teams continue to evaluate other projects in
Yep.
West Africa, and you've got this joint venture with Shoreline Group of Nigeria, the
Yeah.
conglomerate there. Could you talk to me a bit more about that, your other assets, please?
Well, we have as I said earlier,
Hmm.
a certain ability to find opportunities. And one
Hmm.
of the first lessons in life, in the oil and gas business, is that you never rely on any one sort of a single asset or a single roll of the dice, if you want to call it
Of
that.
course. Yeah.
You like to have more than one opportunity,
Yeah.
and so we have been looking for a number of years for other opportunities in Africa, and Africa, things take time. Okay, like it's not a, how would you say it? It's not as a fast to get things done as if you were working in, say, Canada, the United States, or the United Kingdom.
Yeah.
But that being said, is there are very good opportunities there. The second issue that became apparent to me is that I tended to look like, why do people succeed and why do people fail,
Yeah.
and especially if you're an outsider, such as we are. And that would be true of any company based in the U.S., Canada, or Great Britain, and especially Africa has moved out of the, we'll call the post-colonial period,
Yeah.
and has become very nationalistic. And given that I'm from Canada, which we had our post-colonial issues here in Canada as well. But
Yeah.
the oil and gas industry, when I started here in Canada in the early '80s, then it was primarily run out of the U.S. and there was an awful lot of animosity here in Calgary because of that to the
Mm.
U.S. way of doing things. And what's happened in Canada is that the industry here has become, we'll call, Canadianized. Okay, we have
Yeah.
a very vibrant industry here, and it's the power changed.
Yeah.
Okay,
Well,
if you
well,
want to call it that,
yeah, because in the
and
80s,
that's all.
because in the 80s we're seen as the Americans coming across and asset stripping and going away with the oil and the money, wasn't
Exactly, and
it?
you went through the same thing in the UK.
Yeah.
And really what's going on in Africa today is that.
Yeah.
So my having seen it, I thought, if we're really, there's no better place to go look for oil. If you want to get to things, it's easy.
Yeah.
There's already a lot of it been found,
Yeah. Of course.
and in Nigeria, for example, has all kinds of opportunities there, and things that big oil is overlooked and or knew that was there, and they just, for whatever reason, whether it was political or just in their view of size, that they just ignored it.
Yeah.
And now, at the same time, is that there's a desire, and we'll use Nigeria as an example,
Hmm.
of the government, and it is a democracy, to encourage the creation of a Nigerian industry, and just as we went through here in Canada, and so there are people, for example, this Shoreline Group, who are a conglomerate involved in everything from heavy civil construction business to power generation to food processing, is to be part of that.
Yeah.
And so what we have, and where how we married ourselves, if you want to call it that,
Yeah.
is that what we have is that we have the technical team, and quite a good technical team, and the experience, okay, of to be able to say what works and what doesn't work. If you understand what I'm
Yeah.
saying,
Yeah. Yeah.
and 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 the ability to turn around, and you know and but what we don't have is what I call the local, um,
In,
the
indigenous.
indigenous
Yeah.
side, right?
Yeah. Yeah.
So if we marry ourselves to an African group, and we're 50-50,
Yeah.
like there's no golden share or anything else like
Hmm.
that. It's an equal relationship, and what it allows us to do is that we can go and be on the same footing, and say, this is our our capacity, we have it. And of course, with our African partner, we can say, yes, we do recognize that there's a history here, and the history, some of it's not pretty, but
Hmm.
at the same time is to be able to say, we're here to be good corporate citizens.
Yeah.
We're here to help you get where, the politically where your policy is,
Yeah.
because we have this relationship. And believe me, it makes your life an awful lot
Of
easier.
course it does,
Okay.
yeah.
Yeah.
And you're
Yeah.
also obviously going to employ some of their geologists and some of
Exactly.
the
Yeah.
workers and riggers
And
and so on
me
and so
and I
forth.
and I think that that's great. If we can pass along, if I can pass my life's experience and my people's experience to other people,
Yeah.
to me that's a good thing. That's
Yeah.
not a bad thing,
Yeah, that's
right?
good. Yeah.
Because they won't turn into your competitors. They'll turn into your allies.
And
Do you
your
understand what
and
I'm
also
saying?
your champions, because as
Exactly.
more opportunities come and you've proven yourself as
Hmm.
ethical in working with them, they're more
Yeah.
likely to say, oh, there's another opportunity here, or there's another opportunity there.
Yeah.
That's a fantastic way of going about business, I think.
Yeah. Okay.
Okay. Now you've had a quite a good run regarding the share price thus far, Arthur. Ticker symbol COPL on AIM. You've gone from 1.875 at the start of the year, and you're currently sitting at 4.75. But your market cap is still only sub 23 million pounds.
Yeah.
So, given what Shoreline has said, we're going to 16 pence if when this discovery happens in 2017, the investors seem to have an opportunity sitting in front of them here.
Well, I think, way I read their report at 16 pence today.
Yeah.
If the discovery's made, the number's a lot bigger,
Yep.
right?
Of course. Yeah. Yeah.
Yeah,
Yeah.
yeah, yeah. So,
Okay. So, given what you've said about the future of COPL, could you expand on that regarding listeners for us? You've got this going on in Equatorial New Guinea, Namibia, Nigeria. What does the future hold for COPL in your eyes?
uh, my view is this is rather than indifference to what we did at Oil Exco, is that we were focusing on singularly just in the UK.
Yeah.
Is that what our objective is to either, whether it's in Liberia we're working on a project with Shoreline together offshore Nigeria,
Yeah.
which is very attractive. And at the end of the day, we all have to look at where my job
Yeah.
is to look at, and I'm a shareholder as well,
Of course.
is
Yeah.
how do we exit this and to get the best returns for our shareholders and over time. And so the objective here may not necessarily be, the objective here eventually is to sell it.
Of
Okay.
course. Yeah.
And when that time is, and how basically how you get liquidity. So given what we've put together, I think that on success, on a exploration success in Liberia, with the project in Nigeria, which is coming together, and some of the other things we're working on, that
Yeah.
we'll have something, in 3 or 4 years time, that we'll have put a nice bow on, and can go out and sell, and to allow other people to take it the next step, but we can
To the next
capture the
level. Yeah.
value from where we are from now to then. Yeah.
Okay. So obviously the question on lots of listeners' lips and investors that are already invested lips
Yeah.
is what's stopping ExxonMobil to go, okay, we'll not only just take our share of this well and that well, we'll just consume
Yeah, I know.
CoPL.
Yeah. Well, and the thing is since I've been in this business, that question has been around in different cases at times, and generally the oil and gas industry doesn't work that way.
Okay.
And it just is that now, on a successful case, if we were to make a success in Liberia,
Yeah.
we each have the first right of negotiation on each other's interests. So
Right.
there's
Okay.
nothing stopping them from ringing me up one day and saying, hey, can we sit down and make a deal?
Yeah. Of course.
Um, but the same is true if somebody else were to approach us.
Yes. Of course.
I have to go to them and say, look, I've had this offer. It's
Hmm.
unsolicited.
Yeah.
Um, you've got 30 days to, here it is. I don't have to tell you what it is,
Yeah. Yeah.
but the first right to negotiate with
Yeah.
us.
Yeah.
So but right now, I think, from our standpoint, is that if this is successful,
Hmm.
um, and to get it through the appraisal phase and in the development phase, um, to develop if we think the numbers are what they are, it's a big check to write
It's
to
a
develop it.
very big check.
and
Yeah.
and I think you'd find that even from our partner standpoint,
Hmm.
that it for them to bear 100% of those costs, would be difficult.
Yeah. Yeah.
And so, but there are other people in the world that don't like the exploration risks, that are willing to buy an asset
On the
and take
development side. Yeah.
on the development
Hmm.
side, and they take a much lower return,
Yeah.
because and so the people that take the risk on the front end get the higher return,
Of
right?
course. Of course. Yeah.
Yeah, yeah. Okay.
Okay. So at this juncture, then, COPL are financially sound
Yeah,
throughout
we certainly are.
2017 on a free
Yeah,
carry. That just
yeah,
wanted to reiterate that for the listeners that have missed that.
yeah.
So you can actually be spending money on other projects whilst this is being pushed through, come next year as well. So you're actually going to be potentially could be working on two projects at the same time.
Yep, exactly.
Excellent, excellent. Arthur, I've covered all the questions I wanted to ask you. I'm not sure if there's anything I've missed or that you would love to share with the listeners, just to reiterate
No,
the deep potential value that's available to them in
well, all
CLPL.
I can say is that we've got a good presentation up on our website. Give it a look. We've also, have there's people have written research about us, and
Yeah,
get your hands on it and read it. And and I think you can become more informed that way. We're certainly, out telling the story,
yeah.
as there's 1,000 stories in this world, and some people can generally only remember about 10.
Yeah, yeah.
So we'd like to be that one of those 10.
Okay, no, that's
From
that's
the point
brilliant.
of view.
Arthur,
Okay.
what I would ask you to do is nearer September time, when you're getting nearer and nearer to the dates and the specifics of, yeah, LSE Share Talk, we're going to be doing this on the 5th of September or the 10th of December or
Yeah.
whatever it is. I'd love to have you back and speak to you again so we can give our audience, our global
Sure.
audience, an
Yeah.
update as to where you are, if that's possible.
Certainly can. All right.
Okay, that was Arthur Mulholland, the CEO of Canadian Overseas
Overseas Petroleum.
Petroleum, ticker symbol XOP on TSX, and CoPL on AIM. Thank you very much, Arthur. Speak to you again soon.
Take care.
All
Yep.
right,
Thank you very
take
much for
care.
having me.
You're welcome.
Bye.
Bye for
Bye
now.
bye.